Hey everyone, welcome back to the channel. Today, we're talking about one of the most interesting emerging names in India's renewable energy story, Saatvik Green Energy. It's a fast-growing solar module manufacturer that's been gaining solid traction as India moves full speed ahead toward clean energy. Let's unpack the business model, recent performance, key strengths, risks, and of course, the right entry and exit strategy. Let's jump in. Saatvik Green Energy stock is currently trading around 380, which is still well below its recent high, near 510. On the lower end, it has tested levels close to 340, and right now, it's consolidating quietly in that mid-range zone. That's typically the range where long-term investors start noticing, and in Saatvik's case, there's a good reason why. The fundamentals are looking strong. Saatvik primarily manufactures solar modules and currently has a massive annual production capacity of about 3.8 gigawatts. Their modules power everything from utility-scale solar plants to corporate rooftops. But they're not just a module manufacturer. The company also provides EPC solutions, which means engineering, procurement, and construction services. In simple terms, they can design, build, and deliver complete solar power systems. This integration gives them better cost control, stronger customer relationships, and improved profit margins. They work with large developers, corporates, EPC partners, and even government projects. With India's big Make in India push and the growing demand for domestic solar solutions, Saatvik is well positioned to ride that momentum. Now, looking at the financial trend, Saatvik has been delivering double-digit revenue growth quarter after quarter. Margins have improved thanks to higher capacity utilization and better cost efficiencies. The order book remains strong, especially from commercial and utility clients, which means predictable revenues ahead. Put simply, Saatvik is operating like a textbook case of a high-growth solar manufacturer, benefiting from India's renewable energy tailwinds. Coming to strengths, the biggest edge Saatvik has is scale. With 3.8 gigawatts of capacity inside India, it enjoys cost advantages, better delivery timelines, and stronger customer retention. It also fits perfectly into India's long-term energy vision. Solar installations across the country are expected to rise sharply over the next few years. Each gigawatt added creates steady demand for locally made modules and EPC services. Plus, the company benefits from being a domestic producer. Lower logistics costs, faster deliveries, and growing brand trust are giving it a strong competitive edge in the Indian market. Of course, no story is without risk. The key concerns here are pretty standard for solar companies. Raw material price swings, especially for wafers and cells, can quickly impact profitability. Global supply changes can affect module pricing, and since EPC involves heavy cash flow cycles, working capital pressure is common. Technology is evolving fast too. A shift in solar cell tech can make older module formats outdated. With project-based businesses, weather delays or approval bottlenecks can temporarily affect results. So short-term volatility is something investors should always be ready for. Speaking of price action, at around 380 the stock has been consolidating. There's steady support between 350 and 365, while resistance shows up near 410 to 430. If the price manages to break above 410 with good volume, it could indicate renewed strength and a potential short-term rally toward 430 to 455. For traders, that's the key breakout zone to watch. But until it happens, short-term trading remains a bit risky, given the choppiness in the sector. Now, for long-term investors, this is where the opportunity looks attractive. The ideal accumulation range is between 350 and 380, and yes, that's exactly where the stock is sitting right now. Those looking to hold for 1 to 3 years can consider gradual accumulation in this range. The medium-term target looks around 600, and if business expansion continues as planned, especially with margin improvement and new projects, the stretch target could move towards 750 or even 900 over time. That, of course, depends on execution and broader sector demand, but structurally, the setup is solid. To wrap it up, Saatvik Green Energy stands out as one of the promising players in India's renewable energy manufacturing space. It's got strong capacity, an integrated business model, and a clear growth path aligned with national energy goals. At current levels, the stock looks healthy for long-term accumulation, though short-term momentum needs a confirmed breakout above 410. If India's solar momentum continues growing at the projected pace, companies like Saatvik could easily turn into major long-term compounders for patient investors.